In this video, I'm going to be teaching my friend Jay how to trade options in the stock market. But I had you put $500 in a Robinhood account and you can send your order through. All right, at the end of this video, we're going to check in and see if you ended up making money or you lost your entire $500. Jay, obviously you don't know anything about trading, right?
No, I know absolutely nothing.
Okay, so first off, do you know any stocks you want to trade? No?
I think Tesla.
Okay.
Maybe Tesla's one.
Tesla.
I don't know.
So you can look up Tesla. And again, we're going to be buying what is called an option contract. So options give you crazy leverage. So you don't need a ton of money. You don't need a huge account to actually trade with options because you're going to leverage your capital essentially 100 to 1. Okay, so you're going to click on trade, and what you're first going to do is choose an expiration date. So all option contracts are going to expire on a certain day, okay, and at the end of that day. So the closer the expiration date, for example, the December 5ths are the closest, the December 12ths are next. The closer the expiration, the riskier those contracts are. Now, the further out the expiration date, the safer those contracts are. So you're going to be able to make more money on those contracts that are closer expiration, but you're also going to be able to lose more. So more risk, more return, and vice versa. So you could go ahead and choose whatever expiration date you want for your Tesla contracts.
We'll do the 26th of December.
Okay, so a little, I would say not super risky, kind of in the middle there, right? Let it a little bit over 2 weeks out. I think those look pretty good. Now it comes down to deciding actually if you want to bet on Tesla going up or down. So do you think Tesla's going to go up or down?
Up.
Up.
I think it's going to go
Why?
up.
Why up?
I'm just guessing.
You're guessing. Okay. So now if you think Tesla's going to go up, you're going to choose which strike you want to buy. And so the strike is just going to be the share price of Tesla. So there's what's called in the money and out of the money. So you can see the share price is $429.19. And if you're buying a call, you're going to hit on buy call. And so in the money, when you're buying a call, is going to be anything below the current share price. So you can see 428.80 is the share price. So anything below is in the money. And so those are going to be safer, whereas out of the money contracts are anything above the share price. These are going to be riskier. So safer is below share price, riskier is above because they're calls. Now, these contracts, they're not $23 or $20. That's $2,345. So you've only got $500 in your account. You're going to have to buy contracts that are going to fit within your budget. And so those closer expiration contracts, they're going to be cheaper. Okay. And the further out of the money contracts, so above the current share price, they're also going to be cheaper. Okay. They're going to be riskier, but you're also going to be able to potentially make more than those in the money or closer expiration contracts. Does that make sense?
Yeah.
So you're kind of trying to find this balance of risk versus return or risk versus reward.
Yeah.
So you can't afford any of those contracts right now based off your account size. So you're going to have to look further out of the money. So these are like 5. Yeah. And again, that's how they're displayed because you're leveraged 100 to 1, right?
Yep.
You've got 500, so you got to keep going up. All right, so these contracts are only $129. That 535 call. So they're far out of the money, but you can definitely buy a couple of these if you want to.
Yeah, I think we should go with...
And again, the idea here is you obviously are guessing. You have no idea what you're doing. Like, that's most beginners. But what we're going to do is we're going to hop on inside my computer. We're going to go over the charts, and I'm going to show you a strategy that you can actually use to be educated, to actually decide whether you want to bet on Tesla going up or down, figure out when to get in and when to get out. And it's going to be a really stupid, simple, beginner-friendly strategy. So don't worry. Okay. But for now, let's buy these contracts. So are you ready?
Yeah.
Did you decide which strike you want to buy?
I think this one.
550s?
The 550.
All right. You can go ahead and buy as many as you want. They're $87 per contract. Okay. So you could buy like 4, 5.
Yeah,
maybe.
we'll just do 4.
Okay, a little over. So 5 contracts. So whenever you go to buy a contract, there's going to be what's called a limit order and a market order. Okay, so a limit order, you're deciding what price you want to get filled at and what you want to pay for those contracts. And if someone can't match your price, you're not going to get filled. Okay, whereas on the other hand, a market order is you saying, I don't care what I pay for these contracts. I just want to get in. I want to get filled. So right now you can see the bid and the ask. So 84 and 87. So if you're going to get filled at a limit price, in theory, you could put in 84 And more than likely, you'll get filled right now. Or if you just want to switch to market, you'll probably get filled at the ask, which is 87. Now it's 88. So you never want to overpay for a contract. Like with options especially, this is what's called the spread. The difference between 85 and 88 is the spread. And so the low end, if you're buying, you want to pay the least possible. So if you're going to go buy anything, like if you go on Facebook Marketplace, what's something you would want to buy?
Ping pong table.
Okay, so are you going to go look at just one ping pong table and pay whatever they're asking? Or are you going to look at multiple and find the best deal?
Look at multiple and get the best deal.
So that means we want to go in with a limit price. So we're going to type in under the limit price here, 0.86, because you can see that's the bid. All right, now you can hit review and you can send your order through. Let's swipe up to submit.
I hate this part.
All right, at the end of this video, we're going to check in and see if you ended up making money or you lost your entire $500.
Don't say that.
All right, let's go.
Geez.
You're nervous?
Like, I'm nervous for just 500. How do you even? Because I know you do way bigger bets than just 500.
I trade with a $500,000 account. So, like, some of my positions are like 40, 50K. My best day this year was over $45,000 in one day.
Wait.
On one trade.
You put in 45?
No, I put in about 22, 23.
Oh, and you came
It
up
was a
40.
big trade, percentage wise, but you don't need a ton of money. Like I've been trading for 9 years, so I'm used to it, and you'll kind of learn. So what we'll do is we'll get you inside my mentorship, and you'll be able to watch me trade live every single morning. So I'm going to enter and exit stocks. We'll use these strategies, this very simple one plus other strategies. You'll be able to follow along, copy my trades, and that's something I've been doing for years. And I'll put a link in the description below if anyone else wants to join the mentorship and trade with me. Yeah? Sound good. All right. So we're going to pull up my broker here. Now we're looking at charts and candles. And again, this is going to be a really beginner friendly strategy. So all we're going to be using is this one indicator. So under studies, we're going to add this one indicator called VWAP. So VWAP stands for volume weighted average price. You don't really have to know that, but if you're curious, that is the technical definition. So what VWAP does is it puts 3 lines on our chart. When it comes to trading a VWAP strategy, what I like to trade is a mean reversion strategy. So you know what a mean is, right?
Yeah.
Like that middle price, the average median price. So the mean is going to be our, in this case, middle VWAP, this purple line, okay, right here. And so when we're trading, whatever we're trading, it could be SPY, it could be Tesla. Like we could pull up Tesla right now, but we don't want to look at it. But I'm just looking at SPY in this example. Well, we're going to be able to, depending on where the candlesticks are trading at in correlation to our moving averages here, well, we're going to be able to either bet on that stock going up or bet on that stock going down. So like this, think of this middle VWAP as being like an anchor. Price is always going to come back to this middle VWAP. So we're going to move off of the middle VWAP up to the top VWAP. We might move down from the middle VWAP to the bottom VWAP, but we're always going to pass back into this middle. Okay, so that's something predictable. It's something that we know is going to happen. Okay, we always know that's going to happen. So if we want to, let's say, for example, look at SPY, well, we are able to trade long off of our middle VWAP to top VWAP. We could take profit on our calls. We could then short back down to our middle VWAP. We could take profit on our shorts. We could then get in longs, take profit on our longs when we hit top. So you can essentially just trade back and forth, okay, from top VWAP to middle VWAP. So today's a bullish day, at least off of the open. We've been trending up, right? So we know that's a, what trend is that?
Bullish.
From bottom left to top right. So it's bullish. And from top left to bottom right, if we were trending that way, bearish, right?
Yeah.
So bullish and bearish. So we always want to identify what kind of market are we in. So this strategy you can do on a 1 minute time frame. You can do on a 5 minute time frame. You can do on a 15 minute time frame, right? So more than likely, like you're going to use VWAP for day trading. With day trading, you're in and out. You could be in and out within a couple minutes or a couple hours, but you're getting in and getting out within the same day. That's what is classified or called obviously a day trade, right? In a swing trade, you're holding a position overnight, you're swinging it into the next day or holding it over multiple days. So when we pull up our VWAP here, the first thing we want to do is identify what is the trend. Trend is bullish. And then at that point, when we understand the trend is bullish, we need to understand that we're going to spend that session trading above middle VWAP. Now, it doesn't mean we might pull back below for a bit, but look at how we never got to bottom VWAP. We've spent the majority of today trading above our middle VWAP, okay? And so we can go through the S&P 500, the NASDAQ, the Russell, and go through stock by stock and try to identify first, what is the trend, okay, on that day, bullish or bearish. If it's bullish, okay, we can then look at where candlesticks are trading, okay, where they're trading in correlation to our middle VWAP. If it's bullish, they're going to be trading above our middle VWAP. So if it's bullish and they're trading up at our top VWAP, we can buy puts and we can trade a move down to our bottom VWAP. Now, if it's, if candles are trading at our middle VWAP, we can buy calls and trade up to our top VWAP. So you're literally just going long up to top, going short down to middle, and you're just trading that back and forth movement because it's predictable. We know we're always going to come back to the middle. And if we're above, we know we're going to come to the top, right? If we're trending below the middle VWAP, then it would be trading, and we're not in this case, but you'd be trading moves down to low, back to middle, down to low, back to middle. Long, short, long, short. I don't love a 1 minute because there's just too many trades, right? Because those lines are going to be tighter. So if we go to like a 15-minute here, whoa, right? Or a 5 minute, which I feel like a 5 minute's kind of the sweet spot. And what we'll do is we will pull up a stock, any stock in mind, and I'm going to have you first identify the trend and then decide, hey, would we go long or short based off of where we're trading at right now? Any companies in mind?
Can it be like a car?
It could be a car. You want to go with another car company? We can.
I only really know cars.
Okay. All right. So Ford, low volume, what we can see here is like when the ticks are all weird like that, like we can fill in. But you see the pre-market here, how there's like no candles. There's just not a ton of volume. There's not a ton of trading going on with Ford, but that's fine. So what we could see here is obviously right now we're trading right in the middle. On the day, there's no clear trend, right? I wouldn't say we're trending up. I wouldn't say we're trending down. We're kind of just chopping around. So what we want to look for is a really clean and clear pattern, like a clean and clear chart where we can see the direction to the upside or to the downside, where that's very apparent. So I actually don't love Ford.
I was about to say, because you were talking about clean, you're missing pieces here.
Yeah, we're missing pieces. It's choppy.
It's
low
getting
volume.
more solid up, but it's super like... That doesn't...
It's getting more solid because more buyers are getting involved to push this thing up.
But
right?
that much doesn't... I don't know. To me personally, that doesn't really help me.
Let's look at a big one. Like, let's look at Apple, for example. Okay, so here, for example, off of the open on Apple, we opened up on our middle VWAP. We pulled back to our bottom VWAP. At this point, hey, what do? We get in some longs, so we buy calls. Okay, we play the move up to middle. We obviously knew we would move to middle. That was predictable because we always move back into our mean, which this is our mean. And then at that point, we could have taken profit on the calls, or we could continue to hold this thing back up to top VWAP. And then this is where we would take profit. And so you could see how this stock is still pushing up. Apple's still pushing up, but we would have caught the move from bottom VWAP to top VWAP.
Wait, I have a question. You were from here, right?
Mm-hmm.
Why did you stop up there? Why didn't you keep going?
Good question.
Because it's up.
It is. So we're using top VWAP. Think of it as like a ceiling. So most of the time, if we are in a balanced market, and I'm going to teach you that, what that means. If we're in a balanced market, top VWAP is going to act as a ceiling. Bottom VWAP is going to act as a floor. Middle VWAP is going to act as our mean. Okay, so from middle to bottom to middle to top, that would have been our trade. Now we're continuing to push up. So what we can actually do is we can add another chart. Okay, we're going to add another chart. We've still got Apple pulled up here. I moved to a 10-minute time frame. Again, you can use VWAP on any time frame. It just depends on how long you want to be in your trades. So what we want to look at now, on our left side screen, which I just added, under studies, I've added 2 moving averages, okay? And I've added 2 exponential moving averages. I've added a 65 exponential moving average. And I'm going to change the price to high plus low plus close divided by 3. If you guys want to copy this setup, we're going to have a 65. Leave that as blue. And then I'm going to have a 33 Again, these are EMAs, and then high plus low plus close divided by 3 is our price. This one's going to be yellow. So these two moving averages on a 30-minute time frame, we have to be on a 30-minute time frame. We're going to use these to measure balance in the market. And when we measure balance, we can know if we're in a horizontal market or a vertical market. And then when we look at our VWAP on the right side here, we can know if the top VWAP here is really going to act as a ceiling, and our bottom VWAP is really going to act as a floor, and our middle VWAP is really going to act as a mean. Because you just asked, like, why is this thing continuing to push up top VWAP? Why didn't it get rejected here and bounce off the ceiling and come back down to middle? Well, it's because we're in a vertical market. So when we look at these two moving averages, you can see our yellow and our blue in correlation to each other. When they come together, when they touch, and especially when they cross, that lets us know the market is about to make a big vertical move. And when they're touching, when they're together, these two lines on our chart, you can see how most of the time they're not going to be touching. But when they are touching, look at that. When they are touching, the top VWAP is not going to act as a ceiling, the bottom VWAP is not going to act as a floor, and the middle VWAP is not going to act as an anchor or a mean price that stock we're trading will keep trading back into. Right now, this stock could care less about our middle VWAP, our top VWAP, or our bottom VWAP. So to trade this VWAP mean reversion strategy, we do not want to trade stocks when the moving averages come together like they have here. We only want to trade them when they're apart. And you can see
it looks like up further to the right.
When they're apart, most of the time they will be apart. 85% of the time the market will actually be balanced. So 85% of the time we can trade VWAP and trade a mean reversion strategy. Okay, so either, again, long off our bottom, take profit at our middle, or we hold that long to our top and take profit at our top. Again, entry to take profit. But again, this thing is still running. So the thing is, when we're in vertical, when they come together, we don't know how far it's going to go. We don't know how far it's going to keep moving. So it's not predictable. We just don't want to be involved at that point. So let's find stocks that are balanced, where our two moving averages are far apart. They're not touching, okay, like it would have been here, which is 85% of the time. 15% of the time, they're going to be like this. We're going to be pushing, we're going to be moving vertically, either to the upside or the downside, and we can't use the system, okay? So we got to understand what kind of market condition we are in. Now, another stock here, let's try BABA, for example, BABA, just a random one from one of our watch lists. BABA pushing up. Where are we now? We are at top VWAP. We are balanced. Great. So we obviously identify what type of market we're in. BABA is currently balanced. So at this point, if we're sitting at top VWAP, we know we're balanced. What do we know is going to happen? What's predictable?
It's going to go up.
If we're at top already, okay, so think of this as a ceiling.
Yeah, it's going to start going down.
And where is it going to go?
To the middle.
To the middle, right? So what would we buy at this point if we look at BABA? Would we buy a call or would we buy a put?
A put.
A put. We'd bet on BABA to go down. So how would we manage this trade? Okay, if we entered now, we would probably set our take profit here, and we would buy puts and hold them down to our middle VWAP because we're balanced. It's going to come back down at some point today. It's going to have to come back down, okay? Makes sense?
Yeah.
Let's find another example here. Okay, Microsoft. Here's another one. Now tell me, when we look at these moving averages on our left side, that's the first thing we're going to look at. Are we balanced or are we not balanced? So are we in horizontal or are we in vertical?
Vertical.
So when they come together and when they touch, that's vertical.
Yeah. So
vertical is when they come together.
Okay. So we're horizontal then.
We're horizontal, which just means we're going to be trading around our middle VWAP. So let's look at where we are right now. What is the trend? Pretty bullish. Okay.
Bullish.
Now where are we at? Let's see.
Almost up to that ceiling.
Okay. So what would we want to do here? Are we going to bet on Microsoft to go up or down?
Down.
Okay. So we're going to buy puts. We're going to set our take profit at middle VWAP, or we could even set it at our bottom VWAP. So this is where you have to decide. Am I going to trade the move to middle VWAP and take profit, or am I going to continue to hold it to bottom VWAP? So that's an option as well. We can see from bottom to middle to top, to middle to bottom, to middle to top, got close to middle, not quite there. Okay, so sometimes, not all the time, it's gonna touch exactly. So just keep that in mind, the cleaner and the clearer. And the more that stock is respecting our lines here, the better. As in, we wanna see clear touches on every move, clear touches. Let's pull up another stock. Let's try another big name. How about Amazon. Or Google? AMZN, is that Amazon? Yes. Where are we at? Balanced or not balanced?
Balanced.
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 Right? They're not touching.
Yeah.
They're not touching. So we know that we can expect this pattern to happen where we go from top to middle to bottom to middle to top to middle. Okay. And again, we want to see the more the stock respects it, which means it gets all the way to top, it gets all the way to bottom. It obviously crosses middle, the better. It's more clean to trade. Right now, we're kind of just chopping around right here.
It is really close to the middle.
It's close to the middle. So at this point, what we could do is we could still enter at the middle. But typically what I'll do is I will set my stop slightly below the middle. So this would be, we would have take profit at top. Obviously, that's established. And then slightly below the middle VWAP, we would have our stop loss. So slightly below the middle, we'd have our stop loss. So we'd enter, let's just say we entered here. We buy calls. That's our take profit. Slightly below is our stop loss. I mean, this could be your stop loss too. But again, the idea here is that we identify what market condition we're in, and then based off of that, we look at where our candlesticks are in correlation to our lines, our moving averages, and then we make this educated decision, and we actually take the trade knowing something, like not just guessing like you did in the beginning. So I would be curious to pull up Tesla and then look back and be like, hey, was this actually a good decision? But we'll see. I mean, we're gonna have to check in here in a minute and see if you ended up making or losing money. I'm not sure. How do we feel right now? Do you have any questions?
No, it actually is making a lot of sense. The floor, the ceiling, the middle, the left side. I mean, obviously you've seen me struggle. I've given 2 different answers and they've been wrong.
Let's do some practice.
Yeah, because I see it crosses there and it crosses up over there.
Cross. So look how typically right as it crosses, we see this big vertical move.
Yeah.
Look at it crossed and then boom, this thing sold
just
off.
went down.
It just went down. So we don't want to be involved as that's happening. Now there are ways to trade a vertical move. This is just not one of them that we're talking about today.
And so when you talk about horizontal and vertical, what would the lines look like with that? Because I see it's shooting up right there. It's going right up.
Okay, so it's still going up, right? We could still be moving up, but they're not touching.
So that would be...
That's horizontal.
Horizontal.
This is just horizontal movement because on that day, we're always just coming back into that mean price. We're not just moving off of our mean and never coming back. And our mean is our middle VWAP. So it's not like we're moving off of our middle VWAP and never coming back, right? That's what's happening on Apple right now, right? Apple is in vertical. Look at where Apple is now. We are just continuing to move off of our middle VWAP and we're not coming back. So that's vertical. Like, we couldn't be short right now. If we were short,
what's Apple?
What would we do? Like, we would continue to get stopped out if our VWAP, our top VWAP, our ceiling was our stop. So how do we feel now about understanding, hey, if the lines come together, we don't want to be involved, trading a mean reversion strategy. We're totally good if they're super far apart, if they're not touching, if they hadn't just come together.
Yeah.
Right? Any stock that moves to vertical on the same day, I'm not going to touch it. Right? So today, like Apple just crossed, we're in vertical, we're going to stay away from Apple today. I'm still trading live every single morning. I've been doing that for years now. And so, my students are able to sit over my shoulder, kind of like you're doing right now, every single morning and watch me trade and enter and exit these positions. Trading either mean reversion or trading vertical moves like what we're talking about right now. Okay, I think it's time to check in on your position and see where things are at.
I'm nervous.
You nervous?
Yeah.
All right. What do you think happened? Do you think you were right?
I don't know.
You don't know?
Because I kind of just, I clicked on something. I didn't understand what I was clicking on. I just clicked. So now knowing all of that, I have no idea what I even clicked on.
Okay, let's see. Now you understand the importance of actually educating yourself, right?
Oh no! Why? Are you kidding?
Dang. That's so okay. That's not terrible. At the end of the day, that's only 3%. It's $15. No, you were down to $4.85. So you only lost $15.
Okay.
Your account's just down a little. You didn't lose your entire account.
All right.
But let's make
I'm
sure
feeling a little better.
this doesn't happen to you guys. Don't start trading without knowing what you're doing and just lose money. All right, let's go ahead. Let's close this trade out. We'll lock in your loss. Sell your 5 contracts, and we want to sell them at ask, right? We want to get the best price possible selling them. So type in 84. We can see 84 is the best price possible. Review and send that thing through real quick before the spread changes again. There we go. Done. Don't let that be you guys. Click the link in the description below. Join the mentorship, and Jay and I will see you over there. Subscribe for more, and we'll see you in the next one. Later.